Welcome to the 3 in 10 podcast. I'm Scott Slayton, partner and chief strategist at Capital Creek Partners. In each episode, I'll give my brief perspective on 3 things we think market participants need to know this week, and we get it all done in 10 minutes or less. For additional resources and analysis, please visit our website at capitalcreek.com. Here is the starting lineup for your 3 in 10 podcast for Friday, September 5th, 2025, recorded at 11 a.m. Eastern Daylight Time. Number 1, payrolls. The labor market is at stall speed, but have heart, the implications are bullish for financial assets. Number 2, Broadcom earnings, exploding AI growth, and an exploding stock price. And finally, the Shanghai Cooperation Organization Leader Summit and the Chinese military parade. What does this mean for the West? What does this mean for investors? So we'll start with payrolls. The headline was positive 22,000, but that was a big miss relative to the street estimate of 75,000 and the prior number of 79,000. I like to look at the non-farm payroll 3-month average change, which is now all the way down to plus 29,000. I would describe this as stall speed. Good news was average hourly earnings were unchanged at 0.3%. That's exactly what the street expected. And the year-over-year average hourly earnings fell to 3.7%, down from 3.9% in July. That's good. That's an inflation indicator that's heading in the right direction. The U3 unemployment rate, or the headline unemployment rate, was unchanged at 4.3%. We now have very low immigration, so it just takes fewer jobs to keep the unemployment rate flat. In digging through the data, I noticed the U7, or the underemployment rate, or full employment rate, jumped from 7.9 to 8.1%. That is the highest U7 since October of 2021, the highest in 4 years. That's kind of an interesting fact. Jobs were created in education, leisure, and hospitality, and jobs were lost in manufacturing, business services, and government. This trend has been in place all year. Those have been the gainers and the losers all year, trend reinforced again in August. I think the important thing to understand here is this number likely accelerates the Fed's rate-cutting campaign. All year, we've looked for 3 cuts by year-end, and we're even more confident in that view after this number. I think this is bullish for stocks. It's bullish for bonds, bullish for commodities, especially silver, copper, gold, and of course for Bitcoin. It's bearish for the US dollar because the rate differential is going to continue to narrow as the Fed cuts rates. And you're being paid less and less to hold US dollars. And with 35 trillion, 36 trillion in debt, you need to be paid to hold US dollars. It's becoming clear that the U.S. economy is slowing from 3 things: import taxes, less immigration, and higher uncertainty. All 3 of those are weighing on the U.S. economy. On the other side, massive booms in capital spending, especially for AI-related capital spending. So a slower economy is bullish for financial assets as long as it doesn't slow too much and go into recession. And I don't think that's going to be the case. We're going to get more cuts out of the Fed, and more liquidity is going to be flowing from the real economy into financial assets, which is bullish. Now on to Broadcom. Third quarter revenues were up 22% year over year for Broadcom. And the growth here in revenues was driven by AI semiconductors and new innovations in VM cloudware, which I'll touch on. Third quarter EBITDA hit $11 billion, up 30% year over year. AI bookings were extremely strong, according to the company. The full backlog for AI-related equipment hit $110 billion, a staggering number in my opinion. So Broadcom is deep in the AI tech stack, providing semiconductors, networking, switches, and most importantly here, I think helping scale these massive GPUs for LLMs. Demand, interestingly here, demand for non-AI related semiconductors was really slow. And the CEO Hock Tan said it's slow because the global economy is slowing and the US economy is slowing. That ties in pretty nicely with what we learned in the non-farm payroll numbers today. So non-AI semis were flat year over year, in sharp contrast to AI. VMware Cloud will allow AI workloads to run virtually on a private, secure cloud. This may be a huge innovation because it could allow LLMs to buy less equipment and run more of this business in the cloud, a secure cloud, not a public cloud. So this business appears to be exploding for Broadcom, and it makes sense to me that it'll be a really big business for them. Interestingly, financially, free cash flow in the third quarter was $7 billion, or 44% of revenue. So that's one of the greatest revenue to free cash flow conversion rates I have ever seen. To convert 44% of your revenue into free cash is special. There aren't many companies that can do that. So this was a complex call about many different businesses that all seem to fit together well for me. Broadcom is at the heart of the AI revolution. The company's absolutely in the sweet spot from a business standpoint and a financial standpoint. It's a rich stock trading at 50 times forward earnings, trading at 20 times forward revenues, less than a 1% yield, and a $1.6 trillion market cap. That makes Broadcom one of the biggest companies in the world. But we all know that AI is a sport of kings. You've got to pay up to play and be involved. I'm not sure investors should, but this is one of the most interesting companies right at the heart of the AI revolution, and I learned a lot by listening to the call. Now, finally, on the Shanghai Cooperation Organization Leader Summit, otherwise known as SCO, and I'm going to tie that in with the Chinese military parade. So in my view, just watching this, reading about it, and literally watching some of the clips from it, the optics were just not favorable to see Xi Jinping, Vladimir Putin, Narendra Modi, and Kim Jong-un all together smiling, shaking hands. That's just not a good look for the West. We've written and talked about this group of sinkers, China, Iran, North Korea, and Russia coming together. Let's hope India is not added to that mix. And the Chinese military parade was just chilling to me. It reminded me of the bad old days of the Soviet Union when on May Day or May 1st, Comrade Brezhnev would sit back and watch the tanks and the missiles and all his battery of equipment roll by. And when I was a kid, that made me very nervous. One of the takeaways from all this, I think, is that the Ukraine war is likely to burn on for longer. And I have a growing, gnawing concern that Russia is getting closer and closer to winning this war outright. I hope I'm wrong on that, but I just see increasingly cohesive support, especially from China, for Russia's war effort in Ukraine. And I see at the margin a weakening of support by the West for Ukraine. I just think there's fatigue. The war is in its fourth year. It's gone on. And I just worry that Russia could finally get the upper hand and put Ukraine away. So I think we need to understand that we're in a global arms race at a time of accelerating budget deficits, and at a time where AI is changing the very nature of the war and of war itself. And we see this on the battlefield in Ukraine. So it's increasingly clear that the AI race is also an arms race, which is kind of scary. And Xi Jinping reiterated at the end of his parade his desire for China to fight and win wars. That is a quote unquote, and he's had that quote several times in the last 5 years. Will she really build all this military hardware and just let it sit idle? I'm worried that he won't. And I want to recommend to our listeners to either read or listen to the Audible version of Breakneck by Dan Wang. This is a very good book on the dichotomy of China and the US and how the two countries operate at their core. China is run by engineers, almost exclusively by engineers who love to build things. The US politically is run by lawyers who often like to stop things. And we see this in so many ways. Wang points it out. The two countries don't understand each other because they're run so differently and they have different systems. But increasingly, China's engineering prowess gives it an upper hand over the next 20 years. Interesting, chilling, fantastic book by Dan Wang. We recommend it to all our listeners today. So there it is. That's your 3 in 10 podcast for September 5th. And as we always say, do the work, endure the pain of gain, and have investment courage.
The information in this podcast is educational and general in nature and does not take into consideration your personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategy or investment may be suitable for you, consult the appropriate qualified professional before making any final decision.